Futures this morning, right, going into the CPI report, Dow up is 80, S&P, NASDAQ pointing higher as well. We're at any moment we're going to get this report for August CPI. Here's the expectations. Month-to-month rise 0.3%, year-over-year rise 2.9%. Let's bring in Counselor to the Treasury Secretary Joe Lavorgna. He's on set with all of us as we await this number. Good morning, Joe.
Good morning.
So we've talked about it already. What are your expectations for what we're about to get?
The numbers the street is forecasting are reasonably decent. The surprises this year generally, Cheryl, have been to the downside. What I find most interesting is that the tariff effect really isn't in the data. If you look at things to this point in autos, apparel, pharmaceuticals, there's been virtually no tariff effect of any. Where you've seen some inflation is on services. Now, maybe at some point there'll be some tariff effect. It'll be minimal if it ever happens. And the fact that people are still debating and trying to find out if there's actually in the data is reflective of the fact they've completely missed what the tariff effect has been. That Secretary Besson has made this point. Tariffs are generating a tremendous amount of revenue. And the president was very smart in knowing the U.S. has leverage against its trading partners, and they're absorbing the tariff.
Yeah, Mark, I mean, that PPI number yesterday, we had Adam Johnson on set, and his arm was up in the air celebrating because you didn't see at the producer level inflation. You actually saw a much less than expected number. The markets took off on that data. It's all about the cut.
Without a doubt. Now, the prior month PPI number was high. So it came in 0.9, then it was revised lower to 0.7 month over month. And then we came in at a negative 0.1. So, even Jay Powell seems like he's been wrong for quite some time. It seems like he's too late. He should have been cutting. Now, we also know that he didn't have good data to make some of his decisions off of. But he did recently say that any inflationary impact from tariffs would be short-lived. In my opinion, I don't think we're going to see a hot number on CPI today.
Okay.
I think the Fed needs to really focus on the labor mandate. First and foremost, that's where we have the most issues.
The employment picture is something Marcus knows very well.
Yeah, I'd like to see a little bit more on the core, though, because you mentioned that the other countries and the other manufacturers are absorbing all of it. Companies in America are absorbing it. They're not passing it all on to consumers. But we see margin profiles in the fourth quarter, reporting third quarter earnings, you're going to see margin compression.
Yeah,
we got the numbers.
No, not maybe.
Well, no,
I own two businesses.
Well, no, I hear you, but there's a lot of
exist.
companies that actually say the tariffs are helping them because of unfair foreign competition, and a lot of companies, especially on the retail side, say they're not actually even, facing those higher prices.
Let's get the numbers from Lauren Simonetti.
We got them. Consumer prices for August. If you look month over month, they came in a tad hotter than expected. Your number was 0.4% versus 0.3% expectation, an unrevised 0.2% in July. That was a bit hotter. Year over year, smack dab expectation 2.9%, 4 straight months now of rising inflation on an annual basis, but as expected. Let's take out food and energy prices, and as expected, month over month, core CPI 0.3%, year over year, core CPI is 3.1%. Let me show you where the inflation is, where it's showing up, although it is not very obvious. Looking year over year, we are seeing a rise of 3.9% in food prices away from the home, a decline of 6.2% in energy commodities, a decline of 6.6% in all types of gasoline. We are seeing a rise in used cars rising 6% on the year, and new vehicle costs rising 0.7% on the year. Let me get you shelter. Year over year, shelter an increase of 3.6%. I'll give it back to you guys.
Yeah, Lauren, thank you so much. And within the report, the government says again that the largest factor in the CPI report was the shelter component, Joe.
Yeah, I mean, the thing with shelter, the BLS data is very slow moving. It's huge lag, and more up-to-date data on rents are showing that people are actually paying much lower rents. Housing's very weak. Another reason why the Fed should be cutting. By the way, I wouldn't let them off the hook maybe as easy as you did, Mark, because there were governors in July, before they even had the downward revisions, the massive downward revisions to employment, that were arguing for lower cuts. Yeah. Governor Waller and Bowman.
No doubt.
And the Fed needs to be forward-looking. And honestly, when the president's frustrated with Jay Powell, part of it is the Fed wading into fiscal matters. The Fed really is on a monetary policy basis. They shouldn't be focused on fiscal issues and shouldn't be worried about tariffs. Tariffs are not inflationary. If there is an effect, I don't believe there is. I know you do. It's a price level adjustment. It's not an inflationary impulse.
It's a transitory issue.
It's right. If it occurs, exactly. It's a
That's right.
transitory
And so
issue.
I think I want to clarify with you, it's not a demand issue, it's a transitory issue. When I hear about the used cars going up, that's a function of just understanding that new car anticipation price increases are going to go up, so used car values go up. It doesn't have to be a bad thing.
But what's interesting, you talk about your businesses and autos. Now, I haven't done the annualized numbers, obviously, at the moment, but coming into this morning's report, new vehicle prices, which are arguably the most sensitive to tariffs, actually annualized were down, and they were down since the tariffs took off in April. So there's a lot of different cross currents in the numbers.
Can I point out that the markets have actually taken a little bit of a step down? Initially, when that number crossed, you saw the market actually tick higher. Now we're actually pulling back substantially. Again, you know, that PPI report was such juice for the market yesterday. This CPI report seems to be actually having the opposite effect, and we're seeing the numbers down. Also, initial claims coming in a lot stronger than expected, 263,000. The expectation mark was 235. And that employment picture, we know, is something that is very crucial right now for the Fed's thinking. And here we go for the meeting next week.
Yeah. So, I mean, once we get up to like 260,000 or so, that's where I think the jobless claims become problematic. And we're at 263. So we are certainly at a level where the employment landscape has to be front and center. Joe, question for you. If you go back to last year, we had a downward revision of, I think, 880,000 jobs. The Fed shortly thereafter did an emergency 50 basis point cut. This year, it's negative 911,000. Do you think the Fed may decide to do another emergency 50 basis point cut, or are we more likely to see a 25 basis point cut?
Current rates by the Fed's own admission are about 150 basis points above neutral. The 3-month moving average on headline and private jobs, this is excluding those revisions, right now 29,000 for both. Last year, at the time when the Fed met, I believe those numbers were 116 for the headline and 96 for private. So you're looking at a labor market that is downshifted. This is the point the president has made time and time again. And monetary policy has been very laggard in this. Jay Powell has arguably been too late by all these metrics.
Yeah.
A case certainly could be made for a much bigger recalibration, as the secretary has said.
Yeah, well, and Secretary Besson also, I liked his comments about Q4. You're going to see growth. You're going to see those jobs coming back, and I really appreciated those comments.
Well, that's foreshadowing rate cut and capital expenditures increasing, right?
Yeah, and the CapEx story has been great, actually. I mean, it's certainly AI-driven, but in the first half of the year, we've generated CapEx growth in excess of 15%. It's the highest in about a decade and a half. Business equipment, obviously AI, but transportation, industrial equipment, all rising. And you're right, that's the forward on the one big beautiful bill is great for growth.
Joe Lavorgna, it's always great to have you here. Thank you so much
Thanks,
for your
guys.
expertise. Thanks to everyone, Lauren as well.